Hi, welcome to the Crypto Republic. Before we begin today, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Hello, XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest high energy updates in digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to the Crypto Republic, bringing you updates every day at 10 a.m. and 4 p.m. Eastern Standard Time. And here at the Crypto Republic, we give you the bird's eye view, a satellite perspective to spot the big picture shifts while everyone else is stuck in the daily chaos. Just a reminder, this video is for educational purposes only. This is not financial advice. Always do your own research before making any investment decisions. Look, we need to have this serious conversation today about what is actually happening under the hood of the global financial system right now. Because if you're just watching the headline stock indices, you are entirely missing the structural shift that's playing out at the highest levels of the U.S. Treasury. Over the last few weeks, I've been closely looking at institutional flows, and it's pretty obvious. We are standing right on the edge of a massive policy pivot. And this isn't some accident. This is being actively engineered by Treasury Secretary Scott Bessent. His playbook right now, it essentially boils down to crashing the value of the U.S. dollar. I just want to stop and thank everyone that takes the time to subscribe, like, comment, and share these videos. These few things really does help out the channel. With that being said, let's dissect this, and I hope you enjoy today's content. I know crashing the dollar sounds like hyperbole, but I don't mean careless destruction. It's a calculated, deliberate move. They have to flood the global economy with U.S. dollar liquidity right now, or we're looking at a systematic crisis. In my last update, I walked you guys through the mechanics of this, how the Treasury is expanding U.S. dollar swap lines to bail out foreign economies that are starving for dollars. We talked about how, if they don't do this, foreign nations are going to dump U.S. Treasuries. Interest rates will spike uncontrollably, and it will throw the U.S. into a deep recession. Let that sink in. That's super important. Write that down. But as I was modeling this out, I realized that 99% of macro analysts are missing the most critical piece of this puzzle. Central bank swap lines are a 20th century band-aid. They are slow, they are political, and they only fix the plumbing for tier one sovereign banks. They do absolutely nothing to fix the actual frictions of cross-border trade. To execute this massive dollar devaluation and to actually get that liquidity moving through the global economy without breaking the system, they need a neutral, decentralized bridge. They need instant, on-demand liquidity. So today, I want to bridge the gap. We're going to connect traditional macroeconomics, what Bessent is doing, the liquidity squeeze, the hedge fund short squeezing, directly to digital asset infrastructure. Specifically, why this macro environment makes the structural utility of XRP, the anointed one, not just valuable, but virtually mandatory. Let's break this down slowly. All right, to understand where XRP, the anointed one, fits into this, you first have to really grasp the problem it solves. Why is the world so starved for dollars right now? Historically, allied nations got their dollars natural. They exported goods, they sold oil, and dollars flowed into their treasuries. But global trade is slowing down. Those organic inflows, they're drying up. But here's the catch. Their debt is still denominated in U.S. dollars. Let that sink in, ladies and gentlemen. So think about it. You're a foreign government and you can't earn dollars. You have to go out into the open market and buy them just to pay your debts. What does that do? It drives the price of the dollar up, which makes your debt even more expensive. It's a literal doom loop. The U.S. Treasury doesn't step in. These countries have only one lifeline left, selling their U.S. Treasury bonds. And if the world starts dumping U.S. sovereign debt all at once, bond price collapse, yields skyrocket, and the U.S. borrowing costs go through the roof. It's so important that you understand this. Write that down. It would crush the American consumer and corporate balance sheets instantly. So Scott Bessent and the Treasury are stepping in to play defense. They're flooding the system. How? Swap lines. Basically collateralized loans. The Fed says to a foreign central bank, hey, we'll give you U.S. dollars, you give us your local currency as collateral, and we'll swap you back later. We're already seeing the architecture for this. You guys probably saw the leaks about the currency swap agreement being negotiated with the UAE. The Treasury also quietly used its exchange stabilization fund to set up a $20 billion swap line with Argentina. But here's my issue with this. 20 billion here, a swap line there, it's a drop in the bucket. It's vastly insufficient to plug the structural liquidity holes we are seeing in Asia and the Gulf states. More importantly, swap lines only hand dollars to central banks. What about the actual commercial banks? What about the businesses actually trying to move money? They are still forced to use SWIFT and the correspondent banking system. And if you know anything about global plumbing, you know this requires pre-funded nostro and vostro accounts. Trillions, literally somewhere between 10 and $27 trillion are just sitting trapped in dormant accounts around the world just to facilitate cross-border payments. And a liquidity crisis, trapping trillions of dollars, is financial suicide. This is the most important thing to remember. It's financial suicide. The system doesn't need more dollars. It needs to increase the velocity of the dollar it already has. And this right here, ladies and gentlemen, is where we have to stop looking at XRP, the anointed one, like retail traders, and start looking at it like institutional macro managers. What was XRP, the anointed one, actually engineered to do? It was explicitly built to replace the correspondent banking system. Period. It's designed to eliminate the need for those pre-funded nostro vostro accounts. So important. So let's apply this to best its macro environment right now. Let's say an infrastructure firm in the UAE needs to pay dollar-denominated debt. Under the old system, their bank has to source dollars, push it through a chain of intermediary banks, wait 3 to 5 days, and take out counterparty risk. With XRP, the anointed one, and Ripple's payment infrastructure, that dynamic flips entirely. Let that sink in. The local bank takes dirhams, instantly converts it to XRP, sends that XRP across the ledger in about 3 seconds. And on the other side, it's instantly converted into US dollars or dollar stable coins. No counterparty risk. Settlement is instant. But here's the absolute most critical part for the macro picture. Zero pre-funded capital is required. This is by far the most important thing that no one harps upon enough, in my professional opinion. Think about what that actually means for a second. If you eliminate the need for foreign banks to hoard US dollars in reserve accounts, you are essentially liberating global dollar liquidity. You are freeing up billions of dollars that can now flow into local economies or service sovereign debt. Let that sink in. In this context, XRP is essentially acting as an automated, decentralized swap line for the commercial markets. The U.S. Treasury wants to flood the world with dollars, but you can't flood the economy if the pipes are clogged with SWIFT's friction. XRP is the institutional pipe cleaner, ladies and gentlemen. It maximizes the velocity of money. That's why I call it the anointed one. Now let's get specific, because there's an area of vulnerability I'm watching like a hawk right now. The sovereign wealth funds in the Gulf states. These guys are sitting on massive piles of US dollar-denominated assets. But a lot of it's illiquid, private equity, infrastructure, real estate. If the dollar shortage forces them to liquidate to cover shortfalls, we'll see massive fire sales that disrupt global markets. And trust me, ladies and gentlemen, the Gulf states know this. They are hyper-aware of their reliance on the US dollar and the SWIFT system. We've all seen how the dollar has been weaponized over the last few years. They want neutral alternatives. This is exactly why the UAE is aggressively positioning itself as a global hub for digital asset regulation. And it's not a coincidence that Ripple has set up a massive presence in the Middle East, specifically in Dubai International Financial Center. But wait, there's a new variable here that I think ties the entire macro thesis together perfectly. And that is RLUSD, Ripple's new stablecoin. I hear this question all the time from family offices, hedge fund sovereigns, everyone that has retained this in any capacity. Why does Ripple need a stablecoin if they already have the XRP, the anointed one? Well, look at the macro picture we just talked about and painted. And if you got to rewind this, go back. We're taking the PhD out of PhD right here, because I don't want anyone getting cut up like sushi. With the remora, remember this, ladies and gentlemen. The U.S. Treasury needs foreign entities to keep buying U.S. debt. That's the whole goal. Prevent a Treasury fire sale. RLUSD is a stablecoin backed one-to-one by U.S. Treasuries and short-term cash. When Ripple scales RLUSD globally, what are they actually doing? They're creating massive, frictionless, digitized buyer of U.S. government debt. So here's how the plumbing works. In the new regime, a Gulf state uses XRP, the anointed one, as the neutral, frictionless bridge to move value across borders instantly. Once it crosses the border, it settles in RLUSD. What's the result? The foreign entity gets their instant dollar liquidity. The U.S. Treasury gets their debt funded because treasuries are locked up in stablecoin reserves. The systematic risk of a bond market collapse is mitigated. It goes to UNGATS. It's honestly a macroeconomic masterpiece. And XRP, the anointed one, sits dead center as the necessary technology bridge to make it happen. Now, I know some of you are probably thinking, okay, that makes sense on paper, but what about the markets right now? How do we actually trade this? Because none of this is financial advice, just my own professional opinion and anybody that retains any capacity. Well, ladies and gentlemen, let's look under the hood at what discretionary money managers are doing because it's wild right now. Currently, we're seeing discretionary hedge funds dumping tech stocks at the fastest pace in over 2 years. Paradoxically, they're also sitting on a massive short position. Prime brokerage data from last week showed the largest rapid devaluing event we've seen in 7 months. They are betting heavily that this market rally is a fake out and it's going to collapse. I think they're dead wrong. And I tell them every day they're dead wrong. And they're setting themselves up for a violent, systematic short squeeze. Here's why. As the Treasury actively engineers a weaker U.S. dollar, there is a very strict mechanical inverse correlation with the VIX. When the dollar drops, volatility gets crushed, cut up like sushi. When you suppress volatility, algorithmic funds, specifically commodity trading advisors or CTAs, or we call them lemmings, and risk priority funds are systematically forced to buy equities. So you have this fierce tug of war. Hedge funds are selling, but systematic algos are just blindly buying, absorbing all that sell pressure. And yes, we have a hurdle this week. Our models show about $23 billion in pension fund rebalancing coming into the market over a 4-day window, basically forced selling. But honestly, in the context of a weakening dollar and massive corporate buybacks, which are on track to hit $1 trillion this year, any dip from that pension selling is a massive buy the dip opportunity. Because when that estimated $280 billion in algo CTA capital collides with hedge funds who are suddenly forced to cover their shorts, the upward momentum is going to be virtually unstoppable when the rip your face off rally begins. We could easily see the S&P hit 8,000. But how does that impact crypto and XRP, the anointed one? Crypto is basically a high beta play on global fiat liquidity. When the Fed and the Treasury turn on the liquidity hose, the capital flows down the risk curve. And for years, the barrier for XRP, the anointed one, was regulatory hostility. But that regime is over. We have a new administration, and that explicitly backing these unorthodox liquidity measures and embracing digital assets. Plus, we have the legal clarity from Judge Torres. Salute you. XRP, the anointed one, is literally the only digital asset in the U.S. with full legal clarity that is not a security. Write that down. That's massive. That's the runway. Right at the exact moment the U.S. economy needs its utility. Institutional capital is inherently forward-looking, and they are front-running this policy pivot right now. So, let's wrap this up and bring it all together. What is this actually bottom line here? We are watching the largest macroeconomic policy shift since 2008. The Treasury is orchestrating a dollar devaluation to stave off a sovereign debt crisis. But the old plumbing, the swamp, lines, SWIFT, the no-show accounts, they are too slow and they trap too much capital. Foreign economies desperately need frictionless dollar liquidity without being completely subjected to U.S. political leverage. XRP, the anointed one, provides the exact mathematically proven bridge to facilitate the capital flow. And with that, RLUSD, the U.S. Treasury, gets the demand for government debt that it desperately needs to stay afloat. We're not talking about some speculative retail token anymore, ladies and gentlemen. We are talking about an essentially infrastructure upgrade for the global finance. XRP, the anointed one, isn't fighting the system anymore. The macroeconomics has evolved to a point where the system can't survive without something exactly like it. As that wall of algo capital gets unleashed over the coming quarters, assets with real structural utility are going to permanently reprice. So look at the macro data, look at the plumbing, and position your portfolios accordingly. Not financial advice, just my professional opinion retains any capacity. That's all I've got for you guys today. This breakdown helped you. Connect the dots. Hit the like button. Subscribe. Please share this with anyone who's still trying to understand what's actually driving this market. I'll see you guys in the next macro update. Stay out there. Stay frosty. Don't get cut up like sushi. Love you all. Well, ladies and gentlemen, a lot of things to talk about right now. Oil's spiking. It's interest rate day. I want to welcome all the new members of the Patreon, all the new members of the membership channel. Remember, one good tip from the pits can easily pay for your entire year subscription. If you want the deeper macro research and learn how to take advantage of all of this, come and join over 525 active traders and investors in the Patreon, the Crypto Republic Desk Monthly, and welcome to all the new members. Ladies and gentlemen, I want to discuss with you right now what I was talking with my first client, one of the largest family offices that retained us, and I remember gave us our first shot, that was with us with our first pilot refineries over in Indonesia, solvent extraction, electrowinding. And I look back to all the things that we have gone over and invested together and done very, very well, and how the world has changed and it will continue to change. They were asking me what I think was going to happen, which everyone who retains any capacity does and wants to know why. In this game, the more you're correct about the course of chaos, the more people want to know. I always say you hired a financial mercenary, not because you like my methods and tactics, not because you even like me, because I deliver results year in, year out. That's all that matters in this game. What we see happening right now, and I'm going to say this first with a chuckle, because this is where the world is going. Ladies and gentlemen, the world is rewiring itself. I don't need to talk about flipping a switch. I don't need to talk about any of these buzz lines. I need to only go back through commodity-based cycles of what's happening right now. Why I talk about XRP being the anointed one, HBAR, ICP, they play a role in the new world that's building. Again, look, at some point, there will be bases on the moon, okay? There will be military on the moon. Everything between the moon and the earth will be commercialized. There will be businesses there. You cannot stay in the way of progress. You'll become a Luddite. So why I say HBAR, I'm a big fan, I love. HBAR has deals with SpaceX. HBAR is married with ICP. They all play a role in where we're going. Now, again, tying all this back in. Ladies and gentlemen, you're seeing everything happen in front stage. If someone would have asked me 6 months ago, would the UAE walk out of OPEC? I would say no way. But the game of financial finance, and why I call it financial finance, is it's all being finessely rewritten. The world is no longer globalization. It's regionalism. With the fall of Venezuela, all the resources locked in there coming to the United States of America, silver predominantly. They're sour crude predominantly. Again, sour crude, you got to refine it more. You got to step on it more. That's why it's called sour. Sweet, it's less impurities. We see in the world change. So right now, family offices have made their money. They don't want to have to get rich again. So they play everything. The biggest thing that they do, and again, what we advise them is we tactically take advantage of trading ranges to accumulate capital to hoard the future. We used to do this, and we still do, in resources, metals. But everything that's in the ground is spoken for already, ladies and gentlemen. Silver is still being priced at $30 an ounce. I get phone calls every day from businesses trying to lock up what we have. But you're not getting any offtake agreements anymore because the world has changed. I went over constant copper. Again, the world is in a resource war. We went over a lot of these things. But what I said to the family office is, I said, look, now is not a matter of how much you have in the market. Now it's how long you've been in the market. You need to set things and forget it. No differently when we started buying concessions and exploration rights globally. No different when I said there's platinum and palladium in Indonesia and people thought we were nuts. But when we are correct, our bank accounts reward us. So the world is moving to a place of being completely changed. So why I say XRP, the anointed one, ICP, HBAR, they have utilities of where the world is going. You put them together, that is, to us, the trifecta of the new global financial system. To us. Some people can't see it right now. I don't expect them to see because there's a lot of noise. We told you last video that as oil was going to go through the roof, you're going to see risk-off assets come. And when the risk-off assets come, that is when, as financial mercenaries, we accumulate them. Someone else's loss from whatever reasons of poor money management, poor discipline, no trading plan, bad leverage, whatever it was is our gift. Because as a financial mercenary, we are designed for this. We know what we're up against. We know why we're doing this. We know where we're going. So the chaos that is given to us, that's man-made, yes, is our ability to make a lot of money. So I went over a bunch of things. U.S. rates, the 30-year and the 10-year yield. They remain in a 2+ year sideways trading range, with April short-term pullback beginning to bottom near first-term technical support levels. Short-term momentum is turned back from the neutral levels, suggesting further upside testing, with the U.S. 30 yield beginning to challenge an upside band between 5 to 5.5%. That is massive, and it's a growing concern that inflation is growing. So the U.S. Treasury yield is also beginning to bounce following its pullback near 4.2%. So when you look at that, that's very important to pay attention to, because when Operation Predict to Win it begins, yield is the barometer for us, ladies and gentlemen. The dollar DYX remains range-bound between 100 resistance and 96 support, with an oversold trading bounce underway. So if you look at it, 97.5 to 98, it's coinciding with its 50 to 60-point retracement level. Ladies and gentlemen, that is what we said, how the DYX, gold, silver, wheat, everything I'm going over right now, all plays a role. Again, we pay attention to these right now to make more money, to accumulate more ground. I look at all these cryptocurrencies as ground that has to be taken. So if you look at WTI right now, 106, it's on a tear. It's going to keep going higher. There's no reason. There's no reason. If you look at gold and silver, they're expected to remain in broad trading ranges. As far as we're concerned, they're rising above 200-day moving averages with another near-term pullback underway, declining 50-day moving averages. Copper, constant copper, it's also stalling near short-term resistance, while wheat, I love wheat, remains noteworthy as a long-term botting portfolio. Ladies and gentlemen, you got to understand something right now. You take advantage of trading ranges when they're extreme. You take the alpha. You buy ground. Some people buy real estate. None of this is financial advice, just my opinion in case any capacity. You buy ground. That's the most important thing, because the conflict in Iran remains uncertain. So our expectation is for the 30-year yield to continue consolidating under 5 and 5.18%. But that's my view again. So unless it breaks out of a 2+ year trading range as a signal, the inflation accelerating risk tolerance toward the next extension level at 6%, we know that we are range bound. We are paying attention to the 10-year like a hawk. Like I told you, the Widowmaker is my other barometer, the 10-year Treasury and the 30-year yield. That's a big thing right now. So the 10-year Treasury, that yield's pulling back as well. But you got to understand something. These are short-term, and it's being dictated right now because a lot of people on the street, they can't find any trading opportunities, ladies and gentlemen. They can't, because they got to make their weekly numbers. They got to make their monthly numbers. They got to make their quarterly numbers. And right now, we're in between the range. You can't go into the oil trade right now. You buy right here, you're getting caught up like sushi. You are going to get carried out in a body bag, because one little tweet blows the trade in the opposite direction, ladies and gentlemen. The opposite direction, again. So you've got to pay attention. So why we follow the DYX? Again, that's important. That is something that we think has got one of the biggest things to worry about right now. Why? So look, on a weekly uptrend with gold, it's intact, but it's continuing to consolidate in its 2025 surge and a broader trading range as it unwinds the overbought conditions that developed in early Q1. So Support's strong at 4,400 without a doubt, and it's rising as 40-week moving average near 4,300. But its support between 3,886 and 4,070. That's in play. It's also strong. So short-term support levels are on, and that's what we are watching right now, kind of like a parachute. That's important right now because the market has been pushed to an extended part of the range. So short-term momentum is turning down from overbought levels, suggesting a near-term pullback, in our professional opinion, taking hold underneath the resistance levels. That's what we're looking at. But we expect gold to remain in a very, very broad trading range well into Q2, following a strong rebound in 2025. If we look at silver, silver continues to consolidate in a very broad range above support. We do, near its 40-week moving average, near 60. It's following a parabolic move to 117 in late January. Again, not financial advice, just my opinion. On a daily view, what we think, it's similar to gold. It's daily momentum. It's turning down from overbought levels. Look at it. But it's also being driven by the news and oil. Oil is crushing everything. If you're watching every day, and I can't believe I give this away for free, if you took the transcripts from our video every day and you pulled out what you needed, you have such a recce to trade on. It's unbelievable. Really. Seriously. And if you want to see how and become a financial mercenary and see how we put this to work, come and join the Crypto Republic Desk monthly and on Patreon. We'll show you. I love all the new financial mercenaries there who are taking accountability for their own life. They don't want to hear about AI anymore. They don't care. They want to know how to make sense of what's happening. And it's fantastic when you finally say and step onto the trading floor of your own life. Get into the arena. Like Teddy Roosevelt said, the man in the arena. And if you're not in the arena, you got ungats. You can listen up and down. I'll read your comments, and I'm not AI slop. The candle's going down. So what? When it goes down, I feast on the sushi. You should be too, feasting on the sushi. I love you, my haters. I'll give you a hug. Let me give you a hug. Keep coming. You want to vent? The Crypto Republic YouTube channel can be your psychology couch. Write down why you're upset. Because this isn't going to go overnight. This is not a channel that's going to tell you that we're going to the moon. If you're looking for that kind of hopium, this is not the right channel for you, ladies and gentlemen. It's not. The same way when I go on these tirades when I was talking all this to that family office. They think it's hysterical, but it's the truth. And when something works, you don't break it. But constant copper, weekly momentum, is moderately oversold, likely to bottom in the coming weeks following copper's bounce from the 5 to 528 support band with a pause likely underway near the 615 resistance. We expect copper to remain in a broad trading range above in the low mid 500s with resistance in the mid 600s well through Q2 copper. That's what we think. Again, so the daily momentum is now overbought. It's turning negative, suggesting copper, in our opinion, is likely to stall at current levels and pull back with support near 577. Ladies and gentlemen, why we're saying this with everything? Because the oil move exacerbated profit taking. It took the path of least resistance. You take the profit, you take the action off the table, you wait. In financial warfare, you got to fight all day. It's not like watching some movie. It's not like watching a movie. You're doing this day in, day out, 24 hours, 7 days a week, 365, baby. There's no vacation from this. I told that family office I'm probably going to go live on one of those cruise ships for a year. Why not? I mean, I could rent an office and rave on a cruise ship. I don't know. To me, that makes sense. But you know what? What you're seeing right now, and also I'm trying to take the PhD and a PhD. Somebody, with wheat. I love wheat. Wheat goes back to the migrator story when we went out to the Midwest. Ladies and gentlemen, these freebies that we give you here, it takes the guesswork out of this. This is not financial advice. If you follow the stories, I don't watch TV. I follow financial news around the globe. I follow elections. I follow what happens. So to me, it makes sense. It probably sounds boring, but with wheat, we're revisiting wheat given its bottom along a long-term supporting band. Its monthly RSI indicator is turning up from oversold levels. Key upside levels are 77,200. Followed by a broad range between 8,200 and 9,200, consolidated with the 50 to 61%. Retracements of the 2022-2025 decline. So weekly, the bottom profile continues with the recent pullback holding 555 to 5667. Support with 635, next resistance. Ladies and gentlemen, as always, it's not financial advice, it's my opinion. Why I went over those and I rant and rave? With no urea, you got no fertilization. No fertilization, you got issues. You got issues everywhere right now. That's just what it is. But when you look at XRP, the anointed one, ICP, HBAR, that's the future of the new financial system. I don't got to sit here and tell you we're going to 1,000 tomorrow. In 5 years from now, you're going to have a fantastic retirement if you set it and forget it. Not your keys, not your crypto, not financial advice. This is not going to change your life in 24 to 48 hours. Not this year, not next year. You come up with a plan, a fact fund. You follow that like it's a mission because your life depends on this. And you're rewarded for your patience as a mercenary because you got to go into battle every day. I can't wait to read the comments. AI slop. It's going to go down since you posted blah, 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 blah. Why are you even in crypto then? To complain? What's the point? Call it a day then. To me, I get more excited every day because every day as the financial mercenaries, a day we put in work, a day we get closer to our goals, a day with everything. And ladies and gentlemen, if you made it this far, I salute you. And with everyone in the Crypto Republic Desk Monthly, Domenico and myself, starting either this week or next week, we're going to be doing Zoom with all the members. We're going to go over everything, take questions and answers. Because you know what? Helping people is the greatest gift. In life, we make a living by what we make, but a life by what we give to other people. A life by what we give to other people. Winston Churchill, that's where that line's coming from. But it's the truth. So if you're tired of sitting on the sidelines, you don't want to get cut up like sushi, come and join us in the Crypto Republic Desk Monthly. I love you all. I'll see you on the front lines. This content is for informational purposes and entertainment purposes only. Should not be taken as financial advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Always. Remember, the game is changing, and those who understand it first will benefit the most. Make sure you're on the right side of it. You got two choices. You can be like the crowd, reacting after the move, rationalizing why they missed it, telling themselves they'll never let it happen again, or you can be the one who saw behind the curtain, the one who understood the infrastructure shift, the one who positioned early, not randomly, but intentionally. Because some moments in history are loud, but the ones that change everything are quiet right up until the moment they're not. And this is one of those moments. Do not blink, because the world is distracting with noise, while XRP continues developing behind the scenes and building momentum in the broader digital asset landscape. Stay sharp, stay informed, accumulate knowledge. Your move now will be remembered. This is not the end of the story. It's just the beginning. This opened your eyes, smash that like button, ring the bell, leave a comment with your thoughts, turn on notifications, and most importantly, subscribe to the Crypto Republic. We break down the major global banking trends shaping digital assets today, giving you content, clarity, and research you can use. Don't just watch history happen. Stay informed, stay ahead, stay in the Republic. I love you all. I'll see you on the front lines.